Okay, well, the stock has been struggling in spite of the first QIP done. Just what's ailing? Is it the exposure to these NBFCs that is getting discounted again and again?
So I think occasionally what happens, Lata, is that in sectors which face headwinds, you will have a stock that gets dislocated. And then the correlation between the operating performance of the company and the stock performance, tends to break down. And I think that's effectively what has happened. If we look at the bank and the performance of the bank, let's say relative to 6 months back, all the parameters that we had set for ourselves in terms of building more granular businesses, stabilizing the asset book, shoring up liabilities, getting our cost of funding down, I think we've ticked all those boxes. So today we think we are in a much better position than we were 6 months ago. And I think we'll continue to strengthen. So for us, it's a business as usual, and to some extent, a little difficult to explain that, why has the stock moved the way it has.
So let me just try and address some of the investor concerns.
Yes.
Ravneet, good morning, and thank you for being here. Of the total standard stress, the three accounts that investors are most concerned about now is, the ADAG group, the SL group, and DHFL, which I understand adds up to almost 85% of the bank's net worth, which is about 24,200 crores, the total exposure to these three groups. My question to you is, with such concentrated exposure and slower resolutions that are taking place, should we expect higher NPAs in the next few quarters compared to what you've seen in the past?
So I think the point is that the resolution on some of these names has been slower than what we'd anticipated. I don't think there's any question about that. But what progress we have seen with regard to these three engagements has actually been fairly satisfactory. So it's not as if that we've seen the credit profile deteriorate over this period of time. These are names which have been well documented. We have spoken about them very transparently in terms of what our exposures or what our collaterals are. So I don't think that piece itself should be weighing on the stock the way the price of the share would tend to suggest. All these three exposures we continue to manage in a very satisfactory fashion, and there has been nothing which has said over the last couple of months which would suggest that they seem to be moving in a direction which is contrary to what we had anticipated. So I agree that the resolution has been slower, but I would also say that these stocks or these engagements have in many ways stabilized. So I don't think that they are weighing on our asset portfolio quite the way that people expect them to.
So just to read out of this report itself, IDFC Securities expects your gross NPAs to rise to 9% by the end of FY20 versus about, I think, 5% in Q1. You think that's an exaggeration?
It is. So the point really is that I see a lot of these reports coming out which talk about the asset book, they talk about our deposit accretion, they talk about several other factors which seem to me very, very unfounded. So it's not as if that they run this information past us, get a view from the bank before going out and writing this. And I somewhere feel that the way this sometimes undermines investor confidence is one aspect of that, and I think investors tend to be a little more schooled and have a better sense in terms of markets. But the way it undermines overall business confidence, the way it can undermine confidence of depositors, I think is highly irresponsible. And I really wish that at some point in time the authorities started taking notice of this.
No, I agree. But, aside from these statements, the exposure of Yes Bank to some of the NBFCs is well known. And, you had mentioned some of them in your previous calls as well, sectorally. Do you think now that greater provisioning will be needed compared to what you had guided after your first quarter numbers? So
when you, let us say about the fact that there's a larger exposure to NBFCs, our exposure to NBFCs are the names that we just talked about. So it's not as if that there are several NBFCs out there that we have exposure to. So
do you have any exposure to Indiabulls Housing?
No, we do, but
how much would it be?
It's not a very large number. Also, what we have seen with that exposure is that over the last 2 quarters, that exposure has come down almost 30%. Okay. It's well collateralized. I think that the account has performed exceedingly well. We've never had a day's delay in any of the repayments. Okay. So we don't feel concerned about that exposure right now, and it's not as large as it's made out to be. Okay. But equally, the exposure that we have to the overall NBFC sector is sometimes, I think, magnified on account of the couple of concentrated exposures that we do have. But the issue also really here is that when we look at a large financial institution or make an investment case for a large company, you also need to be able to look forward in terms of, what is the runway for growth that company has, one which is a function of the market, and the second is the inherent ability of that organization to continue to grow. So you had, a very large technology company here yesterday. And I think the point that was made was that the next big thing in this country, as far as banking is concerned, is the digitalization of payments, right? That is the next big thing. Tell me about one bank which has achieved that the way we have. And given the fact that, we keep talking about the role that technology will play in financial services sector, what a large competitive advantage that gives us. So what I say is that by all means talk about our asset quality, but take a more composite view of the bank in terms of business as usual and the path forward as well. Capital will come in, and that will resolve many of the issues which today concern the market.
Okay, yeah, but just a word more on the capital. Sure. What is the stage at which it is? Have you been able to get any big funds to commit?
Yeah, so I have to mention this to you that the traction that we have in terms of a larger capital raise is much better, much stronger than what the market is giving us credit for. There are three constituencies of investors that we are engaged with. So there are the traditional private equity funds. There are a couple of strategic investors, and then there are some of India's most respected and highly regarded family offices. And when we look at the composition of these three buckets of investors and the level of interest that we have from them, it gives me every confidence that we will be able to solve for that in quick order.
So what would the dilution look like, and in terms of a timeline, I mean, what should we reasonably expect?
So I think as far as the dilution is concerned, every stakeholder of the bank is very clear that we should raise as much capital as the bank needs. We need to give ourselves enough headroom for growth, given the fact that right now the opportunity for growth is huge, with what's happened to NBFCs, what's happened to some of the other banks. So I think capital is very critical for us from a growth standpoint. And in terms of timeline, I think we will get the optimal capital mix in terms of both the investors as well as the amount of capital that we need. And given that the chances that we will have a larger dilution, and there are restrictions with respect to what individual shareholders can hold, get an optimal mix between the three buckets that I talked to you about.
Okay, can you tell us a little more about your stressed book? Your BB and below book was at 9.4% when you last spoke to investors. How is it looking now? Because, corporate India has also gone through its fair share of trouble. Has that increased?
So I'll give you a small example. I think the government came out with a dispensation with regard to the, the recognition of the NPS for the MSME segment and all that. We didn't have a single one of those to be able to just put that into perspective. Okay. So I think our asset quality has absolutely stabilized, and we are keeping a very, very close eye on that. And in terms of going forward, what our underwriting standards should be, what are the businesses that we want to grow, etc., I think is being done in a very measured fashion. And I think we're just moving to greater and greater strength, which we should be able to demonstrate to the market.
Okay, if you can grow the good book, then obviously the stressed book looks smaller. So how is growth?
So how is growth? So quite clearly, I think over the last 2 quarters, I think there have been quarters of consolidation for multiple reasons. One was that we wanted to grow more of the granular businesses, build more of the flow businesses. So even if you saw the last quarter, we were able to shrink our wholesale book and grow our retail book. It was important also from a liability standpoint. And I think this quarter has been very much about that as well. So I think clearly from the two key imperatives for us in this quarter was, one, being able to conserve capital, and second was to be able to stabilize asset quality. We've been able to do that. I think once capital comes in, then we will get back into a very high growth mode.
Okay, I have to ask you about the India Bulls exposure. I mean, you said it's not much, but just for the benefit of our viewers, what is the exact exposure and what percentage of your net worth is exposed to the group?
So again, I think you recognize, Sonia, that it's very difficult to talk about individual commitments, in a public forum. So what I'm saying is it's an exposure which is absolutely manageable. Okay. We have seen no liquidity issues in this exposure. And like I said to you, that over the last 2 quarters, we've been able to bring down this exposure by almost 30%. Okay. Even last week, there was a payment which was met absolutely on time. Is
it true that about 22% of your net worth is exposed to the India Bulls group?
No. No, that's not true.
It's less than much less than that?
That's
okay. Okay, well, just last word on capital yet again.
Yes.
When can we expect something in the calendar?
So the issue is, as I mentioned to you, Lata, that the capital is much more advanced than the market potentially anticipates. But more importantly, I can also tell you that in terms of the quality of investor that we are talking to and who have now, gone through the detailed due diligence, is something which will really cheer the market. It will something that will, really boost sentiment in terms of, the kind of investors Yes Bank is attracting. The quality of the franchise, the fact that it is a franchise that is, countrywide, and a franchise which lacks nothing in terms of people, in terms of products, in terms of technology, in terms of presence. To my mind, it represents potentially the single largest investment thesis of the decade.
Okay, yes, only it will require patience. And no, I'm coming back to the capital because the erstwhile promoter Rana Kapoor is also selling his shares. Yeah. So, that will take away some of your buyers.
No, I think what you really need to recognize is that if whatever stake the promoter has sold, I think he has been very clear about that a lot of that has been done to deleverage himself personally. And also I think there was an overhang in the market about the concern around the leverage around that stock. So I think the decision that he has taken is actually a very enlightened one. It has been done in the interest of the bank.
Is it done, or is there more to come?
So from what I understood, it's done. And I think it must have been a very difficult decision for him to make, but I think it's a very enlightened decision and a decision that he has taken clearly in the interest of the bank. So the investors that we are talking to clearly see it in that light, rather than saying that, why is it that the promoter is selling stake in the bank?
What's the current promoter stake? I mean, erstwhile promoter stake?
So
between Madhu Kapoor and Rana Kapoor, is it 15 or?
I would say it's closer to 13.
Okay. Are you finding it harder to raise deposits and borrowings right now because of this slew of issues, of the overhang of the NPLs, how the financials have weakened, and also now this RBI oversight will perhaps increase after what's happened with PMC, etc.
Yeah.
Do you think it will be tougher for you to raise borrowings and deposits?
I think we give the market less credit for its intelligence than the intelligence that it possesses. Are the high seas out there choppy? The answer to that is clearly they are choppy. But just because a boat capsizes doesn't mean a ship will capsize. And I think not to be able to make that distinction between a small boat and a large ship, I think is not only naive, I think in some ways I feel it can sometimes be motivated. So we have no concern.
Give us a number here. You said that 9% gross NPAs is over-exaggeration by brokerages.
Yes.
From 5% currently, what's the worst it can get to in your assessment?
So I think I wouldn't want to look forward with respect to that. I have very clearly stated that our asset quality has stabilized. That is number one. Number two, if you look at it from the point of view of liabilities, I think even our sternest critics have said that the bank has done a stellar job in terms of being able to retain its liability profile, and I think a lot of credit is due to the team for having done that. The second thing is, from a retail liabilities perspective, the new fixed deposits that we've opened in this quarter, Sonia, are 39% above the last quarter. So obviously what some of these research reports are saying vis-a-vis how the retail depositor is looking at it is quite different. So to my mind, even the comparison with PMC is, I think, very irresponsible.
No, but you do get where the shareholder concerns come from, right? I mean, your stressed book is about 50,000 crores. Your equity value is 10,000 crores.
So how did we arrive at the stress book of 50,000 crores? So very often what I see is that we had put out a BB and below book of 29,000 crores. Culled out of that was a watch list of 10,000 crores. I find it time and time again, the people say that it's 29,000 crores plus 10,000 crores. Whereas what we have repeatedly said that the 10,000 crores watch list was actually a derivative of the 29,000 stress book. So those are the numbers that I'm familiar with. So unless somebody knows the bank better than I do, I don't know where the number of 50,000 comes from.
Okay, well, there are strong rumors of you leaving the bank as well. Do you want to quell those rumors?
Nothing could be further from the truth. Okay. I think, it's an absolute privilege to be part of the bank and to be running the team that we do. I mean, when you look at the quality of people, you feel such a sense of pride and such a sense of ownership. Last week we had the Asia Pacific head of a very large private equity firm, the bluest of the blue chips. And he was going through the final stages of the due diligence and he met the team. And then we had a wrap-up meeting, and he came to me and he said, Ravneet, I really thought that, given all the headwinds that the bank has faced, you will have a team which will be, reasonably demotivated, inward-looking, introspective. And he said, I couldn't believe at the motivation levels of these people. They were so keen to talk about their businesses, about the future plans, the vision that they had for their individual businesses. And he says, at the end of the day, banking is a people's business. And he says, I was just blown away by the enthusiasm of the people. So with an environment like that and with a team like that, who would walk away?